Let's dive a little bit deeper into the action now with all of our markets reporters. How many do we have? 2. Sarah, get us started.
Thanks, Ramin. The first of 2, like you said. But in the aftermath of the ISM report, I do want to point out that the dollar did move a bit lower. However, in talking to many analysts, strategists across the street, really the agreement is that this is probably just a speed bump in the ultimate move higher, the ultimate rally for the dollar. Take a look at the Bloomberg Dollar Spot Index. Yes, a little bit dipped lower today, but still holding near the highest level since May of 2017. And when asking why, I heard many different reasons. One being the unwind of risk on hedges that after tariffs did go in place this past weekend, they were not delayed. Also, the ECB meeting next week, there is the potential for an even more dovish shift. And last but not least, also interest rate differentials. I spoke with Kit Jukes over at SocGen, and he put it best. He said, why overthink it when you have negative yielding bonds over in the Eurozone, over in Japan, and other places as well? Abigail.
Well, Sarah, the dollar may be fading off multi-year highs, but it is higher on the year, and that's been pressuring EM, or at least one of the factors. Let's take a look at a death cross. This one brought to me by Damian Sassower of Bloomberg. Not all death crosses are created equally, but the EM equity market death cross right now, it's been pretty bearish over the last several years. We see one back in 2015. It's when the 50-day moving average goes below the 200-day moving average, telling you the buyers are out, that the sellers are really in. That one caused a roughly 30% decline. Then we had the big rally out of those 2016 lows for stocks. But last year we had a death cross, EM dropping more than 20%. Right now, just recently, this one that Damian Sassower pointed out to me, not knowing how bearish it could be. Right now, Joe, we have the EM equity index about 10% below its recent peak. However, if these last 2 death crosses are a tell on what could be ahead, it suggests more declines could be ahead for EM equities. Of course, further out on the risk continuum, maybe a bearish sign for U.S. equities over the medium term.